Hello guys, in this video I'll teach illustration 1 of branch accounting. But before moving to the video, please subscribe to my channel and click the bell icon for more videos because that keeps me motivated to make more videos like this. So today we'll see chapter 13, accounting for branches including foreign branches. Illustration 1. Buckingham Bros Bombay have a branch at Nagpur. They send goods at cost. So they are sending that cost. Next, this is the head office and the branch is in Nagpur. However, direct purchases are also made by the bank for which payments are made at the head office. So for only direct purchases, head office is making payments. So all other collections are transferred from branch to head office. So remaining everything will be transferred from branch to the head office. So they have asked us to prepare Nagpur branch account in the books of the head office using debtors method. So they have given this opening balance, impressed cash, opening balance of these. Okay, till here it is the opening balance, impressed cash. Impressed means petty cash. Sundry debtors, stock transferred from HO, direct purchases, and they've also given a cash sales and credit sales. Now, one point you need to keep it in your mind is whatever transaction which is occurring between the branch and the end customer, those you are not taking. You are just taking the transactions which are between the branch and the head office. Now if you take cash sales has been done by the branch to the end customer, so we are not considering this, but instead we'll use this as some adjustment and you will consider these. Cash sales, credit sales. Now direct purchases. Because they have mentioned here is direct purchases will be payment for direct purchases will be made by the head office. So we are considering this direct purchases. Returns from the customer. So rate is regarding customers. So we'll use it as an adjustments. Goods sent to branch. From head office to branch it is happening. So we'll consider this. Now transfer from head office for petty expenses. Even this will consider. So bad debts will not consider. We'll consider it as adjustment. Discount to customers adjustment. Remittance to HO we'll consider this amount. Now one point which I want to stress about here is, see, they have made cash sales, credit sales, and 1,30,000 and 45,000. But in this, they have remitted using this money. I mean, these are the amount which they have sold it, but what they actually received is this much, and they are remitting it to the head office. Branch is remitting to the head office, which is received by remittance to HO. Okay, branch is giving to HO, which is already received by HO is 1,65,000, and remittance has been given to HO, but it has not been received. That is 5,000. The next one is branch expenses directly paid. So this we will consider. Closing balances. Stock closing balance they have given. Stock will be of two things, that is a direct purchase and transfer from HO. Then debtors, they have asked us to calculate even the impressed cash. They have given some petty cash expenses. Now we'll solve this problem. So here is the format in the books of Buckingham Bros Bombay Nagpur branch account. Particulars rupees, particulars rupees. First thing they have given in the question is opening balances. So to balance brought down, we'll write the opening balances. First is to impressed cash, sundry debtors, stock. In the stock we will add both this and write in one. So to balance brought down, impressed cash 2000, sundry debtors 25,000 stock in this transferred from HO and direct purchases 24,000 plus 16,000 40,000. Now opening balance is done. So we'll not consider these, but we'll consider direct purchases 45,000. Now direct purchases had been paid by the head office. So it has been paid through bank. So we'll write to bank direct purchases in the bracket purchases 45,000. Returns from customers will not consider this. Goods sent to branch from HO. We'll write this 60,000. To goods sent to branch account branch 60,000. The next one is transfer from HO for petty expenses 4,000. So we are getting it through bank. So to bank 4,000. To bank 4,000. Coming to this side, will not consider this. Will not consider this. Remittances to HO is 1,65,000. Now, how much is the amount which they have remitted? 1,65,000 plus 5,000. So this is the amount which they have remitted. That is total 1,70,000. 1,65,000 plus 5,000. So right here has by remittances in the outer column, write 1,70,000. Now you need to disclose what are these. Okay. See, with what money you will remit to the head office? Through your sales amount which you have received from the cash sales, amount which you have received from the credit sales, that is from your debtors. So you will write these. First is cash sales. Cash sales is 45,000. After that, cash from debtors in transit. So in transit, it has not been reached the head office, so we are writing it as in transit 5,000. Total is 50,000. So 1,70,000, 50,000 is gone. So remaining what will be there? Remaining will be cash received from debtors. What is that remaining amount? 1,20,000. Now you need to understand a point here. They have made the cash sales and received the money instantly. So we are writing it first. Okay, we received the money, so we are remitting it to the head office. Then they have made the credit sale. They have made 1,30,000, but we don't know how much we have got. Yes or no? So that's why they have remitted so and so. In that 5,000 was in that 5,000 was in transit, and we know 45,000 was cash sales. Remaining would be through credit sales, that is cash which is received from the debtors. So 1,30,000 and 1,20,000 here. I think you understood this point. The next thing is branch expenses directly paid by HO. So expenses is been paid to bank account 30,000. To bank account 30,000. And you need to write it here sundry expenses, because it's normal expense, so we are writing it as sundry expense. For this you write petty expenses. Petty expenses. Now we have arrived at closing balances. The thing you need to know here is whatever is the opening balances, all those opening balances should have the closing balance. You write the same thing here. Impressed cash, sundry debtors and stock in same way. Impressed cash, next sundry debtors and stock. See here, impressed cash. We'll do the working note here. I said now to use the adjustment things, so we'll come to know what we are doing with this. We'll do a working note. Write it right here as note number 1. Note number 1, impressed cash. Impressed cash. So opening balance is 2000 and branch has sent some expenses na? Some expenses to meet some expenses, bank has transferred, I mean head office has been transferred to branch. So from HO you got 4000 rupees for petty expenses, so total is 6000 rupees. In this there are some petty cash expenses of 4000 rupees, so deduct petty expenses 4000 rupees. So 2000 will be closing balance. So write here as 2000. Next is sundry debtors. This is working note 2. So sundry debtors. Opening balance 25,000. Afterwards you made a credit sale, na? So add credit sales which you made 1,30,000. So this is 1,55,000 in total. Then less. Actually, the debtors amount was this much. You need to be given to the head office, but there are some adjustments which you need to remove from this. We'll see what are those. Here you can see you have got a returns from the customer. So you have already got this 3000. So you need to remove this. Okay, you need to list this. Then discount to customers. You have given discount. So less the debtors. Afterwards, bad debts. So bad debts you have to remove it from the debtors, because you already know that these are the amounts which are not coming in. So you need to remove this. And amount has been due for the credit sales. So some amount you have given. You have given 1,70,000 in total. Yes or no? We did the working here. I think you can see 1,70,000. But regarding debtors, you received 1,20,000, and you also sent 5,000, but which is not been received by the HO. But somehow you have, from the debtors you have collected this much of the amount, that is 1,20,000 plus 5,000 is 1,25,000. Now all this you are going to deduct from that to get the closing balance. So write one by one. Returns, then you will be having bad debts, discount, remittance. Okay, so returns was 3000, bad debts 1000, discount you have given us 2000, remittances 1,25,000 as I explained you. So all these you will deduct from this to get the closing balance. So closing balance what you get is 24,000. So here it is working note number to 24,000. And stock they have already mentioned in the question regarding direct purchases and transfer from HO. So 10,000 plus 15,000 will be 25,000. Now make this total and see which side is greater. So credit side is greater, 2,21,000. 2,21,000. We have a profit to net profit transfer to general P&L account. So there you get 15,000 as profit. So that's all is about this question. I hope you guys have really understood the question. Please support me by subscribing to my channel and giving a like, sharing it to your friends, and making my channel to improve so that even I could upload more videos. Please comment in the comment section of how you liked my video, because this motivates me to do more videos. And if any illustration you need, just comment in the comment section and I will let you know about that. So thank you guys for watching this video. Thank you.